First, though, that deeper dive as promised into the jobs report. Our Brian Cheung standing by. Brian, I'm sure you did a double take at your screen as well, just as we did. Talk to us about your impressions here as you look through the numbers.
Yeah, who needs coffee? I don't need coffee. I don't think you need coffee when we have a crazy report like this. Obviously, we've kind of explored at length the headline number coming in way above where estimates were. But I want to emphasize that every employment report has two different surveys that they look at, right? It's an establishment survey where they bring up employers, restaurants and bookstores and what have you, and say, how many people did you hire during the month? And then there's also the household survey where the government rings up households and says, what was your employment situation over the course of the month? And what's interesting is that 467,000 figure on the top line number was from the establishment survey. That's the number that they get from calling businesses that are doing the hiring. But actually, the household survey says a very different story. And the first stat that I want to highlight is one that you had already brought up earlier in the show, Julie. But 6 million people reported that they were unable to work because of a business closure for where they are employed at, or some kind of substantial rollbacks in hours because of COVID-related disruptions, obviously with the Omicron wave having been covered during the survey period. That is a step up from the 3.1 million that was reported to have not been able to work because of the same reasons in December. So that's a pretty substantial uptick. And then the second stat that I want to show you also from the household survey is just the number of people that reported themselves as unemployed, which actually ticked up, not too much, but it did tick up between December and January. So it was 6.3 million people that were reported as unemployed in December, 6.5 million in January. So this is very interesting because the household survey suggests that the picture on employment did show the Omicron disruptions at the 470,000 or so payroll ads from the establishment survey did not reflect. One other point I want to bring up here is that it's not really discussed about exactly the survey gathering process of all this because it's pretty boring, but it is important within the context of the speed of the Omicron wave, because the survey period for this data usually comes during the week covering the day of the 12th of that month, which means that this survey covering the month of January was done during the week of January 12th. And we all know that the Omicron wave appeared to peak really the first week of January. So it is possible that between December 12th and January 12th, that the surveys that were actually done may have missed the top of the wave of Omicron, and that employers were already starting to hire again after that initial wave, especially in cities that were first hard hit, like, for example, New York City. So all really important things to think about as you look through this data, guys.
Brian, I have to be honest with you. I watched your interviews with various Fed members the past week and a half or so numerous times, really enjoyed it. And to me, my takeaway was that they walked back this thinking that we need a 50 basis point rate hike coming in March. But we just talked to Torsten Slok from Apollo Global. He said now the economy might be overheated. We might need that 50 basis point rate hike in March. Do you think these Fed members have made a mistake in walking that back?
Well, one of the people that walked that back was the person that we spoke to on Monday. That was the Atlanta Fed President, Raphael Bostic, who had mentioned that even though he was leaving it on the table and that all policy options are on the table, he was not expecting, as of earlier this week, to actually support a 50 basis point hike in the Fed's next meeting in mid-March. But I also asked him about what he expected to see in the jobs report today. And that is because he was saying, well, based off of what I'm seeing so far, I won't support the 50 basis point hike. And what he told me was that he was expecting a number that was going to be on the downside. He didn't say necessarily it was going to be negative, but I want to read you kind of the quote exactly what he said. I'm expecting that number to probably come in lower than what we've seen for the last several months because the impact of Omicron has been real. And then he added later on that he would be more hopeful that there would be a more substantial rebound in the February and March reports. So by all standards, the number that we had gotten today, this morning, is above his estimates and likely above the estimates of not just those on Wall Street that got it wrong, but probably those inside the ivory tower at the Federal Reserve as well. So if anything, this likely tilts them probably to a more hawkish stance, enough to get to a 50 basis point hike. I won't say for sure. Of course, we have to take a look at where Fed funds futures are right now. We are pricing in about a 10% chance ahead of all of this of a 50 basis point hike in that next meeting. We'll see again if those numbers tick up as we do get closer to that mid-March meeting.